Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on the gold market. So, although at first glance nothing's going on here, this market stands really tight, but there are lots of nuances exist. For instance, recently we discussed the situation that might happen with the testing of the 1886 lows from this top, and today we also need to consider the important moment from technical analysis that could shed some light on the background, because at the first glance it seems that market starts to show some reaction. As you can see, we have some pullback, and it might seem that this is precisely the reaction that we were waiting for. So maybe indeed market will start the upward action. Maybe it's time to go long. I mean on intraday charts for scalp traders. But everything stands not as simple as it seems on first glance. It's just because of the few moments. First of all, if you're considering the action that you see on the gold and other markets, for instance on the intraday, on interest rates, and especially on the dollar index, you can see the outstanding rally of the dollar index right now. So market actually is coming to important top, so already breaking this consolidation, moving higher. At the same time, gold is dropping, and interest rate stands at a high level. It means that this action stands not because of the running in the safety, in the safe haven, because in this situation, usually interest rates are dropping as demand for the safe haven assets increasing, which is the treasury bonds. Dollar could rise in, and gold should also move in higher. But currently we have absolutely different situation. Dollar is rising, interest rates are falling, rising as well, and gold is falling. This explains, in two words, as the bargain hunting. So investors, especially in Europe, situations that there stands really tough, start searching assets with a good reward. And with the recent statement from the Fed and the promising of the acceleration of the rate change, they start to buying the assets with a good return, which is the bonds. It's currently approaching to the 3% yield. So that explains why. So some kind of the more risk acceptance currently stands among the investors, and that makes pressure on the gold, which is a riskless asset and mostly using to save the asset and using in a situation of the geopolitical problems. Currently, it explains the downward action, but that actually what we expected, and that's one of the moments that we discussed in the weekly reports concerning that in the nearest few months gold should remain under pressure. But very soon, within the few months I suppose, this rising yield will become not the let's call it as become not an attractive feature of the bonds, but it will be indicator of the problems in the economy. So what usually happens with the junk bonds? The high yield that they provide, this is not the indicator of just big return, but this indicates the credit risk, the risk of the default. And the same story will be in the treasuries. The high yield becomes an indicator that the economy has the problems, and that might be and should be, according to our analysis, the turning point for the gold market as well. But meantime, in the current situation, with this big demand for the interest-bearing assets, which is the bonds, it's make pressure on the gold market, and that explains why dollar is rising, because to buy United States assets you need the dollars. So how it relates to the situation that we have here? If you take a look at the levels that the market already has passed, it shows you that this minor bounce, this is not the pullback and reaction on the targets that we were waiting for. because currently market already stands below the confidence, so it has been broken, and it stands below the COP target that we discussed recently, even 1886. As market hits it, it shows no significant pullback. So maybe this action, the kind of the Russian risk to grab stops below these lows, it might happen. It's the only reason that we could explain this drop. But in general, when the market shows the pullback from the predefined support and agreement area, it usually starts this pullback right from the point of the agreement. But here we can see additional drop yesterday below this area. On the lower time frame, on the follow time frame chart, from the COP, market has not formed any pattern. This was not bread and butter, not the double repo. Market just keep going lower. Maybe indeed some stops have been grabbed right here, but as you can see, it seems that market should start upward action a bit earlier, and stop grabbing probably has happened a bit earlier because this seems a bit too deep drop. Anyway, we see currently for pullback. The same story on the hourly chart with the head and shoulders. With the butterfly and the potential head and shoulders, you could see that market exceeded 1618 extension. So the pullback has started not from the level that we supposedly set yesterday. So with this testing of the COP, and market indeed has tried to make the pullback, but then collapsed. Yes, here we have some divergence, although it's not really the dominant factor as we already have discussed many times. And this performance makes me stay side by far for taking a long position, although, as I said in the beginning of the video, that at first glance it seemed that that is the pullback particular that we were waiting for. I suppose that it is not. And in the current circumstances, in the current environment, I would suggest that we should get clear bullish reversal pattern and suggest a deep retracement before taking a position. So to not make a bet purely on this minor pullback and on existence kind of the support that we have from the daily were sold, it's confidence support area. It's not enough currently because of the recent performance. So we need something greater. At least if you take a look at the situation, maybe here's a minor and shoulders might be formed, at least wait for this pattern, right? So left shoulder ahead to make the trade because it saves lots of money, but better, I would suggest that it's better to wait for some greater pattern such as here, slightly hand and shoulders on the follow time frame chart. In the current circumstances, this is most safe approach to the current situation because, as I said, recent drop below the estimated targets. This is not good sign for any bullish performance.